What's up, guys? In today's video, I'm going to give you a portfolio update. A few months ago, actually 5 months ago, I shared our portfolio with you, and since then it's grown about $100,000 and it's blown my mind. So I just have to share the power of investing with you. During this time, we contributed about $6,000, I believe, but we're going to dive into it and I'm going to show you all the numbers and whether that growth has come from stocks or our index funds, a combination of both, but you will see it all broken down here. But first, what's up? My name is Maggie Gomez. I teach beginners how to invest and feel confident in their financial lives. I'm a certified financial planner. I have 90 videos on my YouTube channel and I do offer one-on-one services if you like more specific guided advice. So be sure to take a look at those in the link below and let's get started. Okay, we have our money split between three different firms. We've got our E-Trade accounts, which have our brokerage accounts as well as our IRAs. Then my husband has his 401k, and then I have my 401k. So I'm just gonna run through those, show you the balances and where things have increased, and then that'll be it. So first of all, here's our E-Trade account. You can see that we are at $380,000. And I will go through each of the portfolios. First, let's look at the stocks. So here's our stock portfolio. It's pretty much the exact same stocks that we had 5 months ago. So you can see all of those here. Amazon is one of our largest holdings. Well, it is our largest holding, up 170% since we purchased it. Snapchat is up significantly, but we don't have a large amount in there. So that's one of those where concentration builds wealth, but diversification maintains wealth as well as adds some growth. But if you have too many stocks, if you have things spread out too thin, you don't have enough money, even if the stock does really well, you don't have enough money in it specifically to have a big impact on your portfolio. Like we can see with this position that we hold in Snapchat. We had about $1,000, I think, invested, and we grown it $3,000, which is amazing. But if we had $10,000, or way more, it would just be much more of the growth that we would see. But that's the other thing. You just never know which of these are going to do really phenomenal, which are going to do mediocre, and which are going to flat out suck. So there is some chance to it. That's why it's good to have stocks from different types of industries. We do have a lot of tech stocks. That's pretty much the majority of what we have. So we are taking a bet on that. So that's our stocks. We're up 100%, and that's up $64,000. So that means we've invested $62,000, which you can see right here. And $64,000 of this total 126 is purely from growth of our investment portfolio. The power of investing is incredible. So let's go look at now our index fund portfolio in comparison, because we had about the same amount invested in here. Actually, we took some money out of this account for the down payment on our house, but we do have a very simple index fund portfolio. It's a small cap, a large cap, and an international emerging market fund. So we've got three of those index fund or ETFs, which track the index, and you can see we've put in 46,000, we've gained almost 30,000, putting us up 62% in this account. My husband's, so he's got two different IRAs. This one is invested in stocks, so very concentrated in Apple and Google. He wanted to take a bet on a couple of things and he did that, and it turned out really well for him. The other side of it is the index funds. So I much more really like having an index fund strategy and then adding in stocks on top, because if those stocks crash, you at least still have your index funds. So this account is worth $80,000. You can see the index funds here. This is not a perfect portfolio. Some of these have high fees associated, but it's really because this was a robo-advisor and we've just kept the same funds that were in there. And eventually I'll go in here and probably get this down to 3 funds, but for now, whatever, it's fine. Done is better than perfect, as I always say with investing and with anything. Could this be better? Yes, but it's fine for now until I just come in here and make some changes. But you can see we're up 54% in this account. So my IRA is much smaller than his. I only have my original investment in here. And you could see from this video the mistakes that I made when I did invest my first $5,000, which was between this and my other Roth. But when I finally decided to just keep it in Facebook, luckily Facebook did really well and it continues to do well. So now I'm up 185% in that, which is amazing. And my Roth also has Facebook, and then I added in Alibaba more recently. But you could see that Facebook position. This was from 2016, I think. Yeah. And Alibaba, I just bought last year at the end of the year. I think when I did a portfolio review, I decided to add that in. It's not doing well right now, but that's fine. I think it's going to be great. If it's not, that's also fine. So we'll look at everything on one screen. It'll show our overall growth over here is 91%. So it shows that we have invested $197,000 of all the time that we've invested, and we've gained $181,000. So almost double. We've almost doubled our money. And I think the oldest position we have is from 2016. A lot of these were bought much sooner. Like Amazon, for example, this was bought in 2017 and then a little bit more in 2018. And this is what I like to see, just adding into stocks you already own instead of just adding more stocks into your portfolio. Because if you believe in a company, you believe in it and you just can keep investing more money into it instead of getting more and more stocks. But just wanted to show you these. Haven't been invested that long. We have invested a good amount of money, but it hasn't been incredibly long. So my just bringing that up is just to encourage you to get started and keep on going. So this is my husband's 401k. He's at $281,000. He does have a decent match. He's got 3% going on right now. But the investments we'll get into this year has just been phenomenal for the stock market, which is why we're up so much. And everybody else that has invested in just even index funds is doing really well. You could see all the funds here. I did go through and hand select most of these, I believe. We still have some fixed income. I keep meaning to sell that. I will here probably in a bit, just because we're so far from needing this money. We don't really need any fixed income because we are aggressive investors. Now we'll go to my 401k. It is at $40,000. This is the vested part. So this is what's mine. The rest, I left my employer before it became fully vested. So that's why this 47 is higher. Actually, 40,000 is mine. But anyways, let's look at the investments. So I have 3 index funds here, the large cap, a small cap, and an international emerging markets as well. I like to keep things really simple with the investments. So it just is easy to manage and keeps things simple. So that's just a high level overview of our investments. I cannot believe that it's gone up so much in such a short time. I don't expect this type of growth forever, but it's really nice while it's here, and hopefully it keeps going up. But even if it's going down, if you're invested for the long run, it's totally fine. I always tell beginners, when you first start investing, the majority of your account's growth is going to come from your own deposits. And it is so true. And I know it can feel very defeating as you're just starting out because it seems like nothing's happening. But let me tell you, we started investing in 2016. And yes, we've been consistent with our investing for the most part. Now the tables have turned and the majority of our account's growth is actually coming from compounding interest and growth of our investments inside our portfolio versus how much we're putting in. So that is why it is so important. And I just really encourage people to get started and keep on going. Even if it seems like nothing's happening, even if the market's dropping, keep investing. And over time, you're very likely to see some large growths. But if you don't hang in there for that longer time, and I'm talking 5 years, like we started 5 years ago, and yes, we do have high incomes and we were able to put aside a lot of money. But if you just look at those percentages that our accounts increased, you can apply those to your own situation. So if you're not able to contribute a lot, whatever you contribute can still have the opportunity to grow and be so much more for you in the future than it is right now. I would encourage you to take a look at some of my other videos and also my services. If you would like some specific advice, if you find investing overwhelming, I do have an investing course as well. So be sure to check all of that out because you really can get started. It doesn't have to be as complicated as it seems, and it can really benefit you big time later on. If you have any questions, let me know in the comments below, and I'll see you on the next one. Bye.